Required minimum distribution factor tables are changing starting next month, January of 2022. Hey, I'm Kaleb Paddock, the founder of 10 Talents Financial Planning. And if you are age 72 or older, taking minimum distributions from your IRA, 401k, this is for you. Or if you have a parent or grandparent, 72 or older. Once you turn 72, you have to start taking minimum distributions from these retirement accounts, not Roth IRAs, just IRAs, 401k accounts. Used to be 70 and a half. There's been a lot of tax legislation, a lot of changes over the past 3 or 4 years. We get a new tax bill of some sort almost every year now. And so this is one of the things that's changed. In fact, there's talk of moving this to age 75 for minimum distributions. So stay tuned. That age may change. But if you're taking these distributions, typically Fidelity, Schwab, your financial advisor will help you to calculate them. But you're going to want to double check their math this year because the factor tables issued by the IRS are getting changes and updates. This is the number you'd use. Let's say you have $1 million in this account. You divide by 20, 22.3, whatever your factor is that corresponds to your age. That determines what your minimum distribution is. The penalty for missing this or getting it wrong is 50% of the missed amount. So let's say you forget to take this and you have a $30,000 minimum distribution. The IRS says the penalty on that is 50% or $15,000 on the 30. Now, of course, you'd want to write a letter to the IRS, say, I'm so sorry, I forgot this, please forgive me, and you'd cross your fingers and hope they would forgive you. But it's a steep penalty, so you don't want to get it wrong. It's pretty basic, it's pretty straightforward. The IRS publishes the factor table, you divide by that factor, and you're good to go. But it is changing, it is getting an update. So if you're 72 or older, or you have a parent or grandparent, make sure they're aware of this, or if they're already working with their advisor, double check, make sure this is getting updated. It's just one of those things that can be missed in that first year where there's a big change happening. Also, if you have inherited IRAs, that's separate. So if you've inherited an IRA, those have recently had a ton of changes to them, new laws, new rules on how that's being calculated. That's a separate video. Or call me if you have inherited accounts and we can talk through that. The last thing I'll mention is kind of some bonus content is you can avoid minimum distributions if you have all of those retirement accounts in a 401k plan. You're age 72, 73. You normally have to take a distribution, but if you're still working full time at these companies, you are able to get a waiver for those minimum distributions. This is kind of a way around. So if your 401k allows you to move IRAs into them, you can move old RIAs, work with an advisor, work with an accountant to figure this out because it's a big deal and it would make a big impact. But you can avoid those minimum distributions from a 401k plan if you're actively working, actively participating, and you're a 5% or less than 5% owner. So you can't be like the 100% owner of the business, or you can't be a greater than 5% owner in that business. But this is a really cool way not a lot of people know, a little bit of bonus content. If you're not needing that minimum distribution from accounts and still working full time, this is a way to have an exception to the minimum distribution rule. So I hope that's helpful for you today. Call me, reach out to me using my contact information below if you have questions. But thank you so much for tuning in. I'm Kaleb Paddock, founder of 10 Talents Financial Planning, and I wish you a happy new year. Bye now.